What is your expectation for margins ex credits?
So last quarter, Kelly, they were 14.6%. We're forecasting them to be slightly down.
We look at what we think Tesla's worth and where it's trading today. We still see a gap. And so, it's probably better to be a seller than a buyer.
Across the board, I was expecting some wins, some losses. I'm not seeing a lot of losses here.
They did give some guidance related to what the revenue is going to look like. They said that they expect deliveries for 2024 to be up slightly.
All that and more. So let's get to it. Well, looky here. In the pre-market, Tesla stock is up over 11.5%, currently sitting at $238.48. TSLA is inching back to break even. Will Tesla knock on the $1 trillion market cap door again? Let's just say there's not a whole lot of immediate hurdles in their way.
October has been tough for Tesla. The shares are down 17% after the company fell short on Q3 deliveries and failed to impress with its robotaxi reveal. The EV maker reports after the bell, and my next guest isn't expecting to see unit growth this year despite lower prices and says 2025 ain't looking too good either. His 120 price target is one of the lowest on the street. It's 44% downside from the current price. Tony, welcome to you. And the problem with Tesla is it goes through periods where it makes the bulls sound like geniuses and then the bears sound like geniuses, but it's never one or the other consistently.
Yes, it is a really tough stock to trade well.
Probably why you shouldn't be trading it. You should be buying it, holding it, and just waiting for Tesla to bring the future to you.
Sentiment shifts largely on what Elon Musk is saying and what investors are hoping might happen based on those statements. And so tonight we do get real results. We know what deliveries are going to be. I think investors will be focused a little bit on where margins are, which is always a key question. Tesla's had to be more aggressive in its discounting and its financing over the last several quarters. And so investors will be looking at automotive gross margins, ex regulatory credits. That's a key metric. And I think more importantly, they'll be listening for what Musk will say about next year and potential growth. When will the tweaks to existing models occur? And do investors feel confident that Tesla can start to grow again?
What is your expectation for margins ex credits?
So last quarter, Kelly, they were 14.6%. We're forecasting them to be slightly down. There are pushes and pulls on that number. We think the commodity cost environment has improved, but Tesla's also been more aggressive on financing. And Tesla's also cut costs. So we expect them to be flat to slightly down this quarter from the 14.6 level last quarter.
Lowered expectations.
So we've been talking the big picture and conceptually the Tesla story now for the past year and how you've been frustrated, but I know you've still got a decent amount of Tesla on the books, right? So you got to still be running the numbers.
Yeah, I mean, we have a lot of Tesla still, and we, like this opportunity to lighten our load, at these prices.
Yeah, you sell if they ramp on earnings?
Well, yeah, we've been sellers for some time, a little by little, because we don't try to market time. But, we look at what we think Tesla's worth and where it's trading today. We still see a gap. And so, it's probably better to be a seller than a buyer, from a valuation perspective, I guess. Tesla seems to defy, sort of PE logic right now with twice the multiple of NVIDIA. So it just seemed like an easy trade for us to sell Tesla and buy NVIDIA. But that's just, what we do here, trying to make people money at GK, which we're pretty good at.
Just sell it and be done with it, Ross. As you sell, I will continue to be buying.
Well, you've got those Tesla results to bring you, and Phil LeBeau has the numbers for us. Phil.
Morgan, this is a solid beat on the bottom line for the third quarter for Tesla, earning 72 cents a share. The estimate out on the street was for earnings of 58 cents a share. Revenue coming in just a little bit shy of expectations at $25.18 billion. The street was expecting $25.37 billion.
Not sure if that warrants a mixed result. I mean, that's pretty much in line with the revenue, especially when you contrast it with the heavy beat everywhere else.
just starting to dig through the numbers. We'll get you those auto gross margins, excluding the zero emission vehicle credits. But again, Tesla beating the street on the bottom line, earning 72 cents a share, 14 cents better than what the street was expecting.
Tom, what did we learn about margins X credit, and what do you see as the trajectory there ahead?
Yeah, this 17% number definitely way above consensus. Was at 14.5. I was at 13.5, to be honest. I was expecting it to be lower because of discounting that we know did happen, but I think it shows you their underlying costs for their car business is better than any, EV maker certainly out there. I think it bodes very well. They did do some discounting, and they're going to try to get that growth number for the full year. So Q4, you're going to see some price cutting, but if they can still do a 17% margin X credits, that's a pretty strong signal that, they can continue to hold on to margins. And we haven't even talked about the credits, which were huge too. And energy storage, which had strong margins, it looks like. There's a lot to like here. Let's put it that way. It kind of across the board. I was expecting some wins, some losses. I'm not seeing a lot of losses here.
As the news media likes to focus on the negative when it comes to TSLA, there's not a whole lot going on there. The revenue miss? I mean, what was it, a couple $100 million? Let's not forget that they're making money hand over fist. And at the same time, exceeding the CapEx. What the hell is Tesla spending this money on? Oh yeah, that's just the future of general autonomy coming at you.
Let's get more with Fast Money friend Gene Munster. Gene, you heard the conversation here. Where did it come from? And to Tim's point in terms of lumpiness, this looked like a great quarter, but we don't know. We have no idea what next quarter is going to be. And that's sort of the roller coaster ride that I guess investors have to just expect.
Yeah, I want to put a little bit of context on next quarter is that they did give some guidance related to what the revenue is going to look like. They said that they expect deliveries for 2024 to be up slightly. That basically implies 10% growth for the December quarter for deliveries. The street was at 0.5, so call it 1% growth. So their outlook for December was a surprise. I was expecting the profitability to actually be below the street. I was not expecting them to move up. So as somebody who's optimistic about this caught me by surprise, kind of the strength in these numbers.
Not me. When Elon and the team said they were going to have some slight growth back in January, I took them at their word. Meaning that those first two quarters, they were pretty dismal. But the back half of this year was going to be exceptional. So much, in fact, that my prediction for the Q4 deliveries is in the 500 plus range. 525,000 to be exact. Will they hit that number? Probably not. But I do believe that they will have some slight growth for the year of 2024. This will in turn be a springboard for what happens in 2025, which is going to be absolutely phenomenal should they execute properly. We all know how Tesla likes to execute. In conclusion, this is all pre-call. We got to look at what the analysts thought before the earnings report dropped and after the earnings report dropped. I will probably do a hypercut of the Tesla team's earnings call just to showcase the comments of the utmost importance. But for now, bulls and bears alike were all shocked by this earnings report that dropped. If Ross Gerber is a man of his word, he will probably cut his Tesla position even further. It doesn't make sense to me, but you do you, boo-boo. You do you. Meanwhile, Tesla's going to continue to fire on all cylinders. We're not just talking about automotive gross margins, X credits, mind you. We're talking about the company realizing revenue from FSD, Tesla energy margins through the roof, new affordable models on schedule for the first half of 2025. You'd have to be smoking the glass to want to get away from Tesla at this critical juncture. That's all I've got for you today. Maybe. Be easy. Peace.